The person I am having right now with me, Mr. Sameer Nigam of PhonePe, is actually the Maruti of India's digital transaction. You know, Maruti's market share is right now 42 or 43%, but Mr. Nigam's PhonePe is now close to 50% of India's digital transaction that take place in this country. There is this view in some segments that because the banks did not show much interest in this area of digital transaction, digital payment ecosystem, players like you, Google Pay, Paytm have gone and acquired 94% of the market share. How true is that assertion?
There's definitely some truth to it. Initially, when I started talking to them, I used to get very confused because when I deposited money, that's my asset. They used to keep talking about liabilities and they talked about loans as assets. So it took me, as a 20-some-year-old, I just couldn't figure out why they were calling assets liabilities. I thought they had it wrong. Then I realized in their world, they make money by lending and what I give to them is their liability. But there's a natural business model in there. They take on the cheap and they lend on the high.
Yeah.
Now, if that's where you're making 90-some% of your money and the rest is on account opening, why do you care about this thing called digital payments? That's just distribution or dispensation. I don't know a banker who was super excited about operating ATMs once they became interoperable. Why would anybody be excited about digital payments? So I think in part, like a UPI model itself is all about the experience layer and building very, very robust, scalable tech. That's not what a banker's core purpose for or reason for existence is.
If one fine morning, if banks become savvy, they come in, how seriously will you be challenged?
Every time I hear a fintech who's saying, I want to become a lender and I want to become a bank, I laugh. It's the benefit of having similar hairstyles. You've seen enough to know you're not going to become a bank overnight because your mood said you want to become a bank. It takes a ton of work and discipline and governance and skill and all sorts of other stuff. So I think respecting boundaries, I think in the same way, I think 25 years working as a computer scientist and usability expert, I think I can defend turf when it comes to the application layer. The day people here start saying that their banking app services them better than a PhonePe or a GPay or a Paytm or what have you, it's over. I mean, food apps, I'm sure restaurants can make really good food. Swiggy and Zomato don't own the market because they have the best food kitchen. They've tried. Restaurants have their own apps. They haven't won the market that way. I think these are completely unrelated items. I think a lot of hullabaloo is made around it because people assume payments is the natural birthright of a bank.
If you were to sit back and see where you went right and you acquired this 50% market share and where some of your rivals did not get it right, and you wear that thinking hat, and how would you analyze the difference between success and failure?
I think we did two things right and we got lucky on a third.
Yeah.
We got lucky because we bet on UPI before everyone jumped on the bandwagon, and therefore we got that all the wallet players who are now also trying to become UPI players, including Paytm, MobiKwik, Freecharge, they were already on IPL, they were really popular. I think they were so deeply sort of rooted in this value proposition that a wallet is better than the bank. It was hard for them to do a brand pivot. It was actually just a marketing problem. The tech of UPI wasn't harder. And so they were saying wallet is still better. The banks were not interested. The banking app was better. So we were the only ones who were screaming from a rooftop saying UPI is better. It was actually quite just, again, it's just luck. But we exploited that and we marketed very aggressively. By the time Google, WhatsApp came in, Amazon came in at the same time on UPI, a lot of other players came in. I think my response to this was, we will win because we are willing to deploy human beings on the merchant acceptance and operating side, which I don't think a WhatsApp, just DNA-wise, you can't get to 2 billion people on chat clients and social media and then have an operating leg of any kind. It's impossible. But similarly, you can't be in a space as sensitive as payments Payments is not the same as sending a chat message or an Insta post. If the post doesn't refresh, you'll be bummed, but you'll go to sleep. Money is critical. It evokes the most amount of anxiety in life outside of health. I think the second one was wiring. I think we're a lot more comfortable being regulated. We actually welcome regulation. Big tech, well-established big tech that is getting into financial services has always resisted regulation because they've never been regulated.
The NPCI had put out a paper which suggested that maybe by end 2024, the market share for the digital payments player would be capped at 30%. And you are already a giant with 50% market share. When that thing comes around, gets enforced eventually, how are you planning to deal with this big regulatory challenge which will cap your growth and market share?
I think the regulator has a view, NPCI has a view, we have a view, government has a view, Competition Commission I'm sure someday will. I've only asked 2 questions till now, we've not got an answer. One is, tell me what you expect me to do to reduce my market share. There's 115 other TPAPs. Somebody else has to outspend, outwork, outhustle, and pick up their market share. That burden can't fall on me. Second, I think we are all celebrating UPI's success. But if there are another 600 million people left, are you telling me that as market leader, you want me to start telling them, don't use my app because it's the most popular, please go to the next person? That burden can't fall on me anyway. So it's not a regulation, by the way, it's a circle. Again, I'm clarifying this. I don't expect any passes on systemic risk as a large player. I don't expect any pass on good governance or good sort of behavior, not being monopolistic or any of those words. That's fine.
The second point that you were making, or have you made that second point?
I think the second one is that I checked myself because I just realized I'm here live. I think there is a market share discussion to be had once you've actually penetrated deep enough. When the MDR in a particular industry is 0, when there is no natural business model, you will see a contraction of investment by stakeholders. So while there are 150 people, guess who's not advertising for the last 2 or 3 IPLs? We are not because of cap, but nobody else is. Why? You'll invest in a sector if you can make money.
Okay.
And that burden, again, is not on me. I didn't make MDR 0. So you can't say there's no money and then tell the people who are still investing in laying the railroad, don't invest. I'm taking a 10-year view. Either others take a 10-year view, or you make it attractive in the short run.
Thank you once again, Mr. Nigam, for being so frank. Thank you. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.